my strategy gives me consistently days like this, this, and this. Today I'm not only going to show you exactly how it works, but we're going to back this an entire month together. Because I've been there myself, I've been blowing accounts and losing profit from challenges over and over again. So in here, you're getting the full strategy on how to become profitable. Now straight up onto the strategy, but before that we have to cover the context of things. Because if you don't understand the context, then basically you're trading blindly and you don't really know where the market is going to go next. Now let me ask you a very simple question. Why are most traders failing? It's because they don't identify the daily bias and where is the actual global trend going to be. Because chances are you're not looking at the full picture, you're just looking at the very present moment, which is a very limited point of view. Now what is context to begin with? It's when you have an entire framework to build a trade from. Because as I said earlier, you're basically trading blindly. You can have the best strategy in the world, however if you are not identifying the context, then you will not be profitable. Simple as that. Now you might be saying, since you are talking a lot about context, tell us how are you going to identify the right market conditions? Now what I want you to do firstly is look at the very recent price action. I don't want you to go ages and ages on to the past and look for random swing highs and lows that are not even relevant on a chart. I want you to focus at the very recent price action that we are trading in right now. Now the first thing that I can already see is that we have a daily candle expanding onto the upside. Now why does this matter to me to begin with? We have already taken out a swing low. So most likely we're going to go higher because a lot of different stop losses are trapped above these highs. Now a lot of different people would see this big bearish candle that we need to go onto the downside. So instead of just shorting all the way to the bottom to recent lows, we're just going to take exactly what the price action is already telling us, which is that we need to go onto the upside and not to the downside, which already leads us to step 2, which is going to be confluence. Now look, every single profitable trader adds a series of different confluences to their trades. Now look, this is not just me showing you how an FEG looks like, because most of y'all already know it. Now let's go over what the typical retail trader looks at an FEG. Basically what they try to do is, they like to trade onto the FEG and then look on the lower time frame to then trade lower. Now this leads to a lot of frustration and basically everybody's trading the same way, but only if you're actually profitable with it. And it's not because FEGs can work this way, but they are very unreliable. Because how many times have you traded an FEG, you wanted to look something on the lower time frame, but price completely ignored the FEG and went straight up higher? And the answer couldn't be more simple than what FEGs are actually doing. FEGs are magnets and not repellers. Now what do I mean by that? Instead of trading away from the FEG, you want to identify it earlier and trade into the FEG. So the actual trade which you wanted to take has to be way sooner than anybody else trying to short all the way in this box that I have drawn. This is the exact problem that most traders do and they are not profitable with it. Now bear in mind, this was the 4-hour chart. We will now drop down to the 1-hour chart, which already leads us to step 3, which is going to be the execution. Now look, the market rewards the ones that have put in the work. We have put in the work because we have identified confluences on why the trade should go higher and not lower. So from here on, as I have mentioned earlier, you want to drop down onto the 1-hour chart and you want to set your time at UTC standard. Now onto the actual trade execution. As I've told you earlier, you want to drop down onto the 1-hour time frame. The next thing that you want to do is go onto the UTC standard time. From here on, you want to go to the 11 PM candle and basically just market order in. Now your stop loss is going to be according to the recent swing low that has been violated. Now as you can see, this has already been mitigated, and if we are not trading this specific time, we would have been likely been stopped out at this candle wick. And you usually want to target anywhere from a 0.2 all the way to a 1 risk reward. Now in this case, I'm going to take a 0.9 risk reward. So for every dollar we're risking, we're getting 90 cents. From here on, you just want to let the trade play out. No matter what the market is going to do, you have to stay relentless and trade perfectly according to the analysis. And as you can see, that is straight up a take profit hit. Now I can most certainly guarantee you that we will even trade higher, just out of experience. However, you only want to take small and gradual growth over time. Now, and as you can see, this trade alone has given us over $2,000. Stick to the strategy because it will change your life just how it did mine. So on to the next trade. Now, step 1 is going to be context as always. What are the current market conditions? Is the market looking for a reversal because we have hit some major buy side or sell side liquidity? Are we trending or are we consolidating? Now in this case, you can clearly see we're straight up just going lower and lower. We are making lower lows and lower highs. So where is the chart most likely going to continue? We're just going to go lower. And the problem here is that a lot of people make it very complicated because they are not ready to just trade the continuation. Trading continuations is most of the time way easier than trying to predict the reversal. You might have heard about the saying already, but the trend is your friend. Continue what the market is already doing and don't try to catch a falling knife. Now, so this is going to be the 4-hour chart, and I have a very simple question to you. Is this low going to be taken out before this high is going to be taken out, or is it going to be the other way around? Now, chances are, since we are already in a downtrend, we are going for that low and not for the high, which already leads us to step 2. Now, we want to find more confluences for the trade to go lower, because once again, identifying the context is just the very first step of actually entering the trade. So, have we more confluences that we would like to trade off from? Now, earlier I've said that we like to trade into the FEGs and not out of them. However, that doesn't mean that if we have already established movement onto the downside, that FEGs cannot be traded as a continuation or even as a reversal. This is why context matters so much. We have identified earlier that most likely we're going to go onto the downside and not to the upside. So in this case, the FEG is more of a protective high that likely will not be taken out, which already leads us to step 3, which is going to be the trade execution. Now, what have I told you earlier? This high right here will likely not be taken out because we have already traded into an FEG, which makes this a protective high. So we already identified where our stop loss is going to be. Now, if you have already identified where your stop loss is going to be, the next thing that you have to do is basically just identify the risk to reward. Now sure, you can aim for very unimaginable profit targets, right? But in this case, although we are trending, every single trend comes to an end. The longer we are having a trend, the more likely it becomes that it's going to end. So you don't want to shoot for the unimaginable profit target, but just go for a simple 1-for-1. So from here on, you just want to take the market order. Now once again, you want to come into the market at the same time every single day, which is going to be 11 PM UTC 0. If you're not going to follow that, because that is a crucial step in order for you to be successful with the system. So from here on, we're just going to let the trade play out. And no matter if you're going to go into a drawdown, or even if it's going to be a loss, I want you to perfectly execute the trade every single time. Because if you're not following your rules, then most likely you will not be profitable. Now in this example, you can see that initially we traded lower, which is basically favoring our position, but then we traded higher. Now a lot of traders would now close their position right in here because they are being scared out, but this is exactly what the market wants you to do. We have identified that this high will likely not being taken out. So we're simply going to keep the position up and trade relentlessly without any second guesses. Now for you to make the strategy even more profitable than it already is, I want you to go into the daily chart. Now first things first, what I can already spot is that we have 2 swing highs being relatively equal close to each other. Now relative equal highs are basically very strong magnets onto the upside. Now this also counts for the downside if you have 2 swing lows being relatively equal close to each other. In this case, it's going to be for the high. So where are we most likely going to go? For the high or for the low? Since we have already established movement onto the upside, we are likely trading higher and not lower. Reversing from this point on is very unlikely, because a lot of traders see this as resistance. But basically everybody's trading the same way, which is exactly why you're not profitable yet, because you have done the exact same system that anybody in the retail space is trading. So if you want to break through all of that, you need to trade the opposite way, which already leads us to step 2. I want you to go onto the 1-hour chart and look for more reasons on why price should continue higher and not lower. Now the first thing that I can already spot is that we have an FEG in here. So most likely this low is not going to be taken out. But the next thing is also we have another FEG in here. So this low most likely will also not be taken out. So what are the plans from here on? I've told you earlier, if we are trading into an FEG and the bias is going to be long, most likely we will not take out this low before we're going to go higher. because this low has become a protective low. So we already know that this is going to be our stop loss because this low is supposed to protect our entire position. When the stop loss has been identified, the RR or risk to reward has to be adjusted. Now this is mostly going to depend on the context. However, in this case, since relative equal highs are a very strong magnet onto the upside, and also since these are on the daily chart, most likely we'll keep on continuing onto the upside. Now once again, you don't want to be greedy. Greed has led you to a lot of losses and overall just frustration and lost you a lot of money. Just take the position as it is because this strategy is already profitable enough for you to quit your job. So as always, I want you to drop down onto the 1 hour chart, go to 11 PM UTC Standard Time and simply take the trade. So as usual, we are going to adjust our stop loss and our take profit aiming for close to a 141. And from here on, I want you to take the trade relentlessly. Now we have done the entire analysis beforehand, we have stick to the bias, and we have also identified all of the different rules that we have to follow in order to take the trade. And as you can see, the market rewards you if you're actually patient enough and sticking to the entire analysis that you have done beforehand. And this is exactly what separates the profitable trader from the unprofitable trader, because most retail traders would have seen this as resistance, so basically the line that we have identified onto the daily chart, and they wanted to trade lower. But it's the complete opposite. It's what the market wants you to believe, and if you're not being foolish, then you will not fall into this trap. Now, but here's the thing. You already had a proven strategy that worked, and yet you're still unprofitable. It's because when I started 5 years ago, I could have only wished to have an equity curve looking something like this and also being interviewed by prop firms because I've gotten so many payouts. And the problem is, it has cost me money, time, energy to get to this point that I'm at right now. In order for you to save all of this different stress, I've created my own personal mentorship where I guide traders through everything they have to learn in order to become a profitable trader. You don't have to work with me. Everything is already free on the internet. What I'm giving you in my mentorship is basically everything that you need to know without all of the different noise and also guru information that you're getting on YouTube. So if you want to work with me, it's the first link in the description. Now, whether you want to work with me or not, I appreciate you watching all the way till the end of this video. This is already proving to me that you are serious about trading, and most likely you'll become a profitable trader and you're on the right path. Thank you for watching. Make sure to like the video, subscribe to the channel, and comment down below.